morning, good afternoon, good evening, traders from across the globe, and welcome to the 1030th installment of Short-Term Trading Live with Oscar, and that would be me. Traders, Oscar Carboni live. Well, it won't be live when you see it, but it's live now. This is being filmed on Tuesday night for trading Wednesday. That would be June 5th, 2013. Traders, as we know, futures trading can be extremely risky, cause substantial financial loss. You know what I'm talking about, right? You can lose more than just a few dollars in this game. Make sure that you recognize a stop as your best friend and know that futures trading is not suitable for all trading accounts. For you cowboys out there that don't mind playing the ponies, let's go, because this one's going to be interesting. All right, so, again, video. We're filming Tuesday for trading Wednesday, and that is June 5th. Let me show you what's on the board. In my last presentation, and in fact in the last 3 presentations, I have shown you we've stayed with a theme. In that theme was this: in today's new world economy, dips are mere buying opportunities. Ask any fund manager. And I showed you this cycle chart in the emini S&P. I've been showing it to you for the last 3 videos. This cycle chart shows us that the dip that we are in is one of several dips that have happened in the last year. These dips are only 8.5 days in duration on average. In other words, we pull back and come out of the hole. It takes about 8.5 days on average. The longest pullback to recovery was 12 days. The shortest one was 6. When you add them all together, all the days it took, and then when you average, it comes out to 8.5 days in duration over the past year or so that we have these pullbacks. So, guess what tomorrow is? Tomorrow would be day 10. The longest pullback action that we've seen in about the last year was 12 days. It's already a day and a half past the average. So my point is this: we have a red arrow. We know we're going to start this day off from the short side on Wednesday. But for a longer term view, remember that we are in some kind of a weird cycle, and until we get past about 12 days, we have to trust that the market will gain some legs over the next 2 days and head back up. We've been in a big booming bull market for quite some time. You come off for a couple of days, that is not a bear market, traders. It does not make a bear market. Bonds have been coming off. The gold has not gone through the roof. There is no reason out there to think that we're going to have a major crash by any means. We are very nimble with our selling for tomorrow. We're going to sell early. When it comes down, we're going to get out early because I'm worried about the turnaround. It's going to come at some point. Traders, come on down to livewithoscar.com. Come to my live trading room. It is free. And in that trading room, I will teach you how to read these charts in the very same fashion I teach you every night in these videos. With no further ado, let's go look at some charts. Okay, traders, the first chart you're going to see this evening is the emini S&P daily bar chart, and it should look familiar to you. I have shown this chart to you in the last 3 videos, and I showed you how first of all, the market comes down and usually starts to rally back out after 8 days. And in general, they don't last longer than about 8.5 days. You got one that lasted 12 days. Literally from this first day, it dropped all the way until it came out of the hole. 12 days. You had a 6-day job, a 9-day, a 9-day, and a 9-day. And again, I'm talking about it's been going up, up, up. So the first day it starts to head down. You put a circle, right? And there's 9 of these before we're finally back out of that hole. That's how I'm doing this. So here, we had 6 of them before we were out of the hole. We had 12. This was a long one before we were finally back out of the hole. Here we had 9 of these days where it went down and back up before we were out of the hole and back into the rally. And we have had 9 days of this one that we're in right now. Tomorrow is day 10. So for a longer term view, traders, you got to look at that and do not fall in love with the downside. The entire event usually lasts about 8.6 days on average. We're at day 10. The longest one was only 12 days from top to back out of the hole again, right? From the top to the bottom and back out of the hole, 12 days. Top, bottom, back out of the hole, 6 days. Top, bottom, back out of the hole, 9 days. Once again, top, bottom, back out of the hole, 9 days. And we went top to bottom. We're not out of the hole yet. It's been 9 days. Tomorrow makes 10. Very interesting. For the long-term view, And once again, for long-term view traders, we're looking at the emini S&P weekly bar chart. Now, what has happened? You can see that we were in a wonderful blue parallel channel for quite some time. We broke out of that parallel channel, went into a secondary red one, this one here. All we did really was rally up to what is the major parallel channel that's been keeping this market in check for the last 2 years. All we did was rally up and hit it and come back down, and we're just now getting to the top of this channel that we broke out of, right? So this channel was here and here, and we went bottom, top, bottom, top, bottom, top, bottom, went to the top, got above it, got to here. All we've done so far is come back to test that trend line. So if you look at the weekly chart, there's not a lot of damage being done. Traders, don't go crazy thinking we're going to get into a crash here. I don't think that's what's happening. Now, short-term trading. What are we going to do tonight into tomorrow morning? We have a bear flag in the emini S&P on the daily. We have broken down from that bear flag. It's also in what's called a parallel channel heading lower, and the target is 1595 to 1590. That would be this yellow trend line right here. That's simple analysis. That's our first simple target, and that is likely where you're going to go before it finds legs. Now, that short-term trading, we're going to start this day off short, but remember we have that 8.6-day cycle looming over our head, and we're in day 10. So, yes, we're going to go short expecting this, but we're going to be very nimble with our short trades. Next, traders, look at Dow Jones Industrial Average. Once again, these pullbacks are not that long in duration, and we've had a lot of time here already. So, it looks like it could absolutely start to gain some legs very soon and head right back up. So when you look at the Dow, if you connect all these lows, the Dow is looking fine right here. It really isn't getting much damage done to it. But we are going to start off Wednesday as sellers, undoubtedly. Then when you look at the leader, the Dow Jones Transportation Average traders, you'll note that there's been a head and shoulders formation, very little ones, right? You have the left shoulder, you got the head, you got the right shoulder. They are usually, a big head and shoulders is a downward projection or a downward signal. But these are very small, little teeny head and shoulders. And when you find a small head and shoulders, it's usually a continuation pattern in a big booming market. Again, a small head and shoulders, continuation pattern. Another small head and shoulders should be a continuation pattern because we've just come down here and hit a major trend line. So I'm thinking that if we get another day or two on the downside, that's about all we're going to get unless the transportation average breaks this trend line and settles down here. That could create something different, a big downdraft. So to reiterate, we are going short on Wednesday at the onset of trading, but we're worried about that 8.5-day cycle. And we also know that the leader has been bouncing off of this support zone. So traders, be careful, be cautious, start the day off from the short side, and stay at livewithoscar.com in my chat room so I can help you get through these rough and tumble days.
Traders, Oscar Carboni is holding another OMNI Camp live in Las Vegas. OMNI Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
So, traders, you've seen the charts, and there is my technical argument for why we go with the red omni at first, but I am not convinced that it's going to stay that way. I think we're going to get a whole lot of this happening very shortly. But one day at a time, one trade at a time. Right now, the omni's pointing lower. We start off Wednesday lower, knowing there's an 8.5-day cycle that's already overdue to head back up. Knowing that the transportation average has bounced off of a major trend line, but at the same time, we've got a red omni, and we start the day off on the short side. Traders, again, come on down to livewithoscar.com. Come to my free trading room and allow me to help you understand these charts. Don't trade alone. We have an ever-growing community of an army of Omniacs, if you will, that hang out with me every day, and I help them get through these rough and tumble markets. And you know this is not easy. I've got 31 years experience I share with each and every one of you on a daily basis. So come on down and hang out with me. Traders, one last thing before we go. I am holding an Omni Camp at the end of this month. It is a 4-day live training session held here in Las Vegas. I have 2 open seats. If any of you would like to come out and train with me for 4 days, you better come to my livewithoscar.com site and fill out the Omni Camp application. Otherwise, someone else is going to take that spot. All right, traders, that's about it. I'll see you at the site. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video number 1030, and do not fall in love with the downside. Just give it a little peck on the cheek. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.